Hello, my YouTube friends. What an incredible week in the equities market. I'm going to go over the stocks I talked about in last week's video and talk a little bit about what happened with Starbucks because, of course, all of us, I imagine we were all thrilled to see it. I'm also going to go in depth a little bit about Google as well. But stick around, should be a really good video. I'm excited about this week. Good morning. My name is Adam Kahn. This is Investing with Adam K. Today is August 17th, Saturday. Hope everybody's doing well. Oh my God, what an awesome week. I was super thrilled to see how the equities behaved, and I was super fortunate. It kind of reminds me of one of the weeks when I was on the trading floor. I don't remember my best day. I sure remember my worst day down there, and I'll be happy to tell that story if anybody's ever curious. But I had one week where it was just amazing all 5 days. And that's how I feel about how the past 2 weeks have been. And I want to thank you guys. Like, I mean that seriously. Talking on YouTube has made me a lot more patient in my trades. It's a reminder of the things that I want to do, and it helps me to stick to them because it gives me a bit of accountability. And for those of you who have investments and watch them all the time and have thought about it, really, if you do it for yourself, forget if you get followers, forget anything else. It really ends up helping your strategies and helping you to stick with it because I feel like I have a commitment to the things I tell you guys. So it forces me to do what I wanted to do in the first place. I say that because a week ago Monday, when the market collapsed a good bit and it looked real scary, I know myself well enough as a trader that oftentimes that's when I take some risk off the table because I get nervous as well. But I sat there and I was really relaxed, thinking about the channel and the things I talk about, recognizing that nothing had changed week over week in terms of my opinion about what's going on in the economy. I really settled down a bit and I actually dove in pretty deep going on margin, which I do not recommend. And that makes a good opportunity to say this is not financial advice. Please reach out to your own financial advisor, do your own research, whatever it is that you do for your own investments. And do not listen to me for investment decisions. This is just entertainment purposes. And I'm talking about the things that have worked for me over the years. And I highly don't recommend buying on margin. At the same time, I did, and I bought in pretty heavily. On Friday, I eased off a lot of it because not only had the account gone all the way back up, I was actually up a significant percentage, but I was really lucky in what I bought as well, so I just felt really fortunate. But it was like one of those weeks where every day just seemed to get better and better. I mean, the past 2 weeks, really. And I hope you guys did as well. I hope your stocks performed really well. I hope they rebounded the way I thought the market would. I didn't expect it to happen so quickly. And quite honestly, I really meant it when I said buying with two hands, like on the floor when you were super aggressive, you'd be like, buy and buy. So you use two hands versus one hand when it was smaller trades. Um, I just kept buying as the market corrected. And on Monday, it was like, well, nothing has changed in the economy. I think everything's fine. And what I find interesting as we get towards the Fed meeting is I think they're more likely to cut a quarter point than anything else. I know a lot of people are predicting a half. I think you're going to have a lot of people yelling and screaming as they didn't do enough and things like that. But the reality is the Fed shouldn't be concerned about the stock market. They have two mandates, which is unemployment and keeping price stability. They're not supposed to worry about the economy, and I don't think how well they're supposed to worry about the economy, but those two factors are supposed to be able to hold the economy together. They're not supposed to worry about stock market and valuations of things and investments. And I don't think Powell really does worry about that stuff in general. Also, it seems as if it looks like it probably was somebody blowing out of a position. My guess is the yen carry trade pushed a really large investor or investment group to have to be able to sell a ton of equities across a bunch of markets. And there probably wasn't enough volume to take the other side, and people were nervous because they didn't know what was going on. Now that they recognize all that that's all it was, you see things rebounding, going back where they were. And I want to stick with the things that were doing best beforehand. So let's talk about the things I mentioned in last week's video that I was picking up. So Meta, SMCI, Google, Amazon, and CrowdStrikes were the ones that I talked about. I also had Nike on. Ulta, I had a tiny, tiny position, and all of those have rebounded really well, and I'm super excited to see it now. SMCI, that I was actually down a little bit of money last week when I did the video, has had exceptional follow through and it's done really well. If you own it and if you keep an eye on it, I would pay attention to see if it gets above, I want to say $720 range. It might have been a little bit higher. After they reported their earnings, it actually shot up. And I can tell you because I was super excited. I had a very small position. I was like, oh, I knew I should have bought more. It then reversed like a rubber band, ended up going the other direction and going lower. It went from like 600 and something dollars per share all the way to 720 something. I don't remember exactly where it got. It then reversed, and over the next few days, it traded below $500 a share. Well, same thing. As opposed to getting scared and worried about it, I bought more. I rounded up to an amount of shares I wanted to own. It's now trading around $620 a share. I think it closed at on Friday. I'd have to take a look. If it gets above the top of that level where it was trading when the earnings came out, I think that just shows that it has room to really continue to run. And I think SMCI is one that is super undervalued. I don't think a ton of people trade it, so it creates for a ton of volatility. So I'd be real careful on it, but I think it's a great investment. Um, Amazon has obviously already rebounded up to the mid 170 to $170 range, which is great to see. Amazon is one of my favorite. It's probably my second favorite. I was about to say my favorite, but Meta really is my favorite company. But I think Amazon is a great way to kind of own something that is spread out among so many divisions and has such a powerful brand. Like, I don't know about you guys. Like, most of the stuff I buy now, I buy on Amazon. I'm not even price sensitive where I'm comparing it to this one or that one or the other. The convenience of it showing up at my house the next day is so valuable. I don't really care if it's $5 more on Amazon. Now, most people buy on Amazon because it's less expensive, but that's why I started there. But over time, it's gotten to where the convenience factor is such a big issue. I just think they're such a great company. And then with CrowdStrike, the reason I picked it up was something that my brother said that I recognized, like that was really smart. He made a comment about when it was going on that they had that outage and all the companies were getting really upset. He's like, my God, if they cover these many big companies against all of these different industries and are affecting it in that way, they're a really important company that I want to own. So I continued to watch it fall. I was fortunate enough to pick it up at the right time. It's now rebounded and it's actually up a good bit. And I think, like Palo Alto Networks, CrowdStrike is the other one. Like, those are the two top cyber network, cybersecurity companies that are out there. And the bad news, I think, created an opportunity to own it. I think the lawsuit that Delta was bringing against them actually caused it to go a little bit lower, but creating a better opportunity to buy it even cheaper because it created a ton of panic. You then add Monday into it when they're already getting the selling and everything else. It really pushed it to an extreme, which, if you're looking to pick it up, was super cool. Now, if you owned it from above, it was a really rough down move, but I think now it kind of churns its way up because the initial quick move of what I would call the easy part, which is not so easy, understand that, is finished. You'll now see it kind of up and down, but I do think it's going to continue to go higher. Like I said, I still expect the markets to be making new highs by the end of the year. So that's why I saw this as such a great opportunity, and I just tried to remind myself of that. Now, I also try to keep in mind that I can be wrong and that the gloom and doomers out there do make a lot of good points. There are a lot of scary things going on. So I try not to do it where I get so crazy that if I put on a rather large position, I'm still quick enough, or I'd like to believe it, that I will try to get out if I really think things are turning for the worse. But I'm trying to keep in mind, and I hope you guys are, that as a country and as an economy, not as an individual stock move that's having a rough day for whatever reason. So, a great example of why I want to say thank you about the patience and everything else is an example that I don't know how many of you even remember a video I did about a month ago when I was in Croatia about a trade in Nvidia and trading calls against it. Well, I can tell you most of the time on something like that, I would take a quick loss, move on, and whatever else. But I really wanted to stick to it because I did the video for you guys, and I trust that Nvidia is a good company. And when it actually fell recently, what was going through my head is by the time Nvidia is giving their quarterly report, my guess is they've still crushed it. Nothing has changed in the economy, just like I said before. Nothing has changed in their world. The companies that are buying their chips are companies like Meta and Google and Amazon and Microsoft that have very deep pockets and want these chips and are trying to buy them. I don't see that changing over the quarter because of what else was going on. I actually bought a tiny bit more, but my option expired on Friday. I was looking at options to sell, but I kind of held off and I'm trying to decide what to do. And if you guys have some suggestions, by all means, make sure to put a comment in the comment box. But I was waiting because the earnings only come out in about 2 weeks. And what I find is volatility tends to push up as you get closer to the earnings. Now, originally, I had sold a 131 call for $6, and I think I got about 30 cents with the $6. And my thought was, what great return on Nvidia. And now I'm looking at the 131 call about a month out and it's offering another $6. Again, the only reason I've paused is I'm waiting for the earnings to come out because I think there's opportunity to do a little bit better. It might be a mistake, and in some ways, I should probably just sell a call every month and collect that premium because it adds up. And the point of the video was it's 19% return if you annualize it, forgive me, if you do one call owning 300 shares. Now, I understand that might be a big position for some people. Forgive me just to divulge and share. It's something that I don't see as a huge position for me. It's something I'm very comfortable with. I just want to thank you that I've actually stuck with the position and I'm seeing how it works out. Now it closed back at $124 a share, so it's right back in that pocket where it was. And again, it makes me much more patient to actually do the videos, talk about the trades I want to do and the positions I have and my goals with it. So again, do me a favor if you want, put a comment in the comment section. Tell me what you think I should do, if I should sell the call now and just stick with the original plan. Should I wait until we get either close to earnings or after earnings? I really think they'll have a phenomenal quarter. I do think they'll also note that the next chip that they're working on has a bit of a delay. I don't know if the stock will overreact to the downside about that, but I find it almost funny because the reality is that allows them to sell more of the current chips. There's still huge demand. There will be demand for the new one as well, and I just don't see it hurting their sales. And then there were two stocks that had really interesting moves that both did the same thing for similar reasons that I did different things on. One was Ulta Beauty, the other was Nike. So it came out that Warren Buffett had added a large position in Ulta Beauty, shooting the stock up. Bought it for the same reasons that I did, which actually I think it was his name is Joseph Carlton. I'd been listening to him and he made a lot of really good points. I like his channel about how it's undervalued. And I think they're a great company in a good space. They've got tons of stores. My wife shops there. Mary Diller, who I follow, who used to run it. I think since leaving, it's probably had to transition with the new CEO, and maybe things have slowed or stopped growing the same way, which makes me think that Foot Locker will have its day if you keep an eye on it, because that's where she is now. Anyway, that's a separate story. Either way, I thought that Ulta Beauty had gotten oversold. It came out that Warren Buffett had been buying it, and the stock shot up like $50 in the day and then another $10 on Friday. I got out of the position. I think it's a bit of an overreaction. I also hate that the stocks do that when it shows somebody like Warren Buffett bought it because maybe he's right, maybe he's wrong. I get that he has a fantastic record of how he's done in the past, but nothing has changed in their earnings. Nothing has changed in anything about the company. All that came out is a large investor who's very good at what he does bought some of the shares. Now, If I'm Warren Buffett, I would start giving that information out and getting out of the shares when it goes up like that. Either way, I still thought it was a bit of an overreaction. I do think Ulta is probably still a good investment, but it was just a little bit too much of a move. I had such a small position. Instead of paying attention, it wasn't like I was going to add on to it to grow it into the position I would have wanted. So I moved on from there. You guys, if you own it, I would do whatever it is that you want to do with the stock. I really wouldn't listen to me on that, but it just seemed a little overdone. Now, at the same time, Nike had the similar type of reaction, not quite as big a move, because Bill Ackman picked up the stock. I don't know what it was about the move in Nike that made me feel like there's still room in it and it's going to continue higher. Again, I might be wrong. You guys need to make your decisions on that. Maybe it just goes right back down. But I feel like Nike, the news was so negative for so long. In Ulta Beauty, nobody talked about it much except for Joseph Carlton. And with Nike, it was just coming out in the news consistently the same way it was with Boeing. And I'll talk about that a little. On and on about how things were changing, more competition, and everything else. Most of the time, these large companies that are really good at what they do, of course, they have competition come and go. But in the long run, they know how to deal with it. They continue to grow and they continue to expand their business. Nike is a great company with lots of products. They do apparel, they do shoes, they're getting into other things. Jordans are still a super popular shoe. Maybe they're losing some of their market share in the running world, which is where they began, but they're growing in the apparel. I think they'll figure it out and continue to grow the company. I still see it as a great investment. I did not get out of my shares. I did sell a call or two, and I'll probably get taken on one of them, which is great. That's just fine with me to trim down that position a bit. Which brings me to both Boeing and Starbucks, that both had CEO changes and some interesting things going on. Now, I think you guys know I've been talking about Boeing a long time, which I love. I love how much negativity there was and still is in the stock. They had a lot of problems, some major ones and then some minor ones, and the news just went on and on pushing all of that. Now, please, the reason I love all of that is because what happens is when bad news comes out, it causes people to sell the stock, meaning all the bad information is already priced in. When nobody likes something and it's just going lower and there's nothing good looking in the future, like you can't see any good in a company, that means it's priced really fairly and it's on sale. Boeing is still a moat where there's only two companies that make airplanes, and 40% of their business is government contracts. 60% of their business is selling to the airlines. Well, that's a great stock and that's a great opportunity. And with all of that negativity that kept coming out and kept pushing it lower and kept sounding so dire and awful, who was buying it? There's so few people that were. And it kept hitting these levels, but somebody was coming in and taking the other side. And they're well aware of the things that are going on, that all of the people saying it's going down to zero. One person was telling me that the chart is telling him it's going to 100 at a minimum. I even asked him, do you plan on shorting it? To which he said, no, he never short stocks. But I figure if you're so sure that it's going down that far, why wouldn't you short it and take the opportunity? My end is when the news is that bad and somebody is buying it, I want to be on the buy side because they've already priced in all that bad information. Well, this week, Boeing finally saw a little bit of life again. It's back up to $180 a share. It's been in a range. It hasn't really gotten to 200 at this point. But what I found really interesting is they changed their CEO. And if my timing is right from what I remember, and it may not be, it sure looked like there was a little bad news on the day that he took over and the price was at the lows again. I think it'll be really interesting if at that transition that's the lowest that the stock ever is. And with the new CEO, he's able to turn it around and the stock starts drifting higher. Now, what I'm talking about on the channel is the way I've been trading it. I did put some in the safe deposit account as well that hopefully I just leave there. But I see Boeing as a great opportunity to have a really good trade over the next 6 months or a year. Just like the rubber band scenario that I gave in SMCI, it happens the other way. What I hope is it gets oversold. As it starts drifting higher, eventually people want to get back in who sold it and messed up, and then they overbuy it, pushing it a little too far to the upside. Once it goes too far to the upside, I'll either sell some calls or take off the position or whatever it is I do. But I'll be keeping an eye on Boeing. I hope you guys do as well. And then, oh my God, did you see Starbucks and the reaction it had when they changed out the CEO? Now, I thought it was overdone, but to be fair, they got in a CEO who could really transform the company. So maybe it's really the beginning of an upswing. What I worry about is we have the same type of move, I'll mention her again, is when Mary Diller went to Foot Locker and the stock got super overexcited, had a huge rally. The reality is he's not going to be able to make any major differences for the next couple years. Like things take time. Companies are big steamships in the water. It's not like he comes in and all of a sudden, bam, 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 things are just better. They're booming. They're making more sales. They're growing the same store sales and. It takes time to get there and to make those transitions. So what I worry about is the stock gets overexcited. First quarter, they forgive him that reports next. Maybe the following quarter doesn't forgive him quite as much. And in the third quarter, when nothing's really changed and the earnings aren't much better than where they were today, they might beat up the stock, driving it back into the 70s, maybe even a little bit lower before it takes a couple of years till he actually makes the changes and you see the stock start growing and it starts going in the other direction. Now, I don't know that that'll happen. Keep in mind, Starbucks is one of my larger positions, and I'm not doing anything with it, even though I think that might be what happens with it. The reason I own Starbucks, as mad as I was at the previous CEO for sounding like a dodo when he kept talking about it's the customer's fault that their sales aren't good, that really bothered me. I think they are a great brand. I understand, similar to Nike and some of the others, they have some competition and everything else, but I've heard the same thing about McDonald's for 40 years. I think Starbucks continues to be the top name in the space. They continue to grow their company and it continues to build year in and year out. The stock price is going to have years that are bad and years that are good. But I really plan to own Starbucks for 10 or 20 years. The fact that it was up $20 and change from 75 to 95 in a day, while that looks great and it gets exciting and whatever else, I really don't pay attention to that stock that much. I just want to own it. It's one of those set it and forget it and put it in the safe deposit box. I do get happier to see them go higher because I think that's great, but I try not to pay too close attention to it, which is why even if it goes back down into the 70s, even if they push it down into the 60s because the earnings don't go up in the next like 6 months the way that the market may be hoping it does, and it takes longer, I'm not going to worry about it either way. Now, my hope is that doesn't happen and maybe it just starts drifting higher and somehow, it just keeps going from there. I don't know that that's so realistic, and I'm not going to trade it that way either. And then the one company that didn't really perform so great over the past 2 weeks as the stock market's rebounded that I purchased was Google or Alphabet. But let me tell you something. I actually took off the margin and I've actually pushed more and more into Google based on what's going on and why the stock's been struggling. So the Department of Justice is coming after Google to potentially split it up, calling it a monopoly. Now, let me tell you, I think that the Department of Justice has lost their concept of what the problem with monopolies are. I worry that they'll go after Alphabet and possibly Meta as well. Amazon and possibly Meta as well. But let's go back in time as to why they had issues with a monopoly. Well, when the gas companies were being all bought up and put under one name, they were able to raise the gas prices and start gouging people. These new companies, when they get bigger and bigger, that isn't what's going on. They're actually a benefit to the consumer and to people. Amazon has brought competition and less expensive pricing. They've changed that industry in a way that's good for the consumer. I don't really see any of them as an actual problem, and I sure don't see Google as an issue that they see them as a monopoly. What's the difference? Does it really cost us more as a consumer, or are they able to use economies of scale to make things less expensive and beneficial for us, and even be able to grow in terms of research and development and everything else because they're a larger company with deeper pockets and have the ability to drive things forward? So I think the government is getting kind of stupid with their reasoning as to what a monopoly is and why they originally went after monopolies. This is not a negative for the consumer. And it makes no difference to me if I'm using Safari on my iPhone or if I open up my iPhone and I have a few different choices to choose from. Because what I've noticed about search in general is they've all gotten similar where they sell advertising and they aren't the best search in the world. When I think 10 years back, the search engines were so much better and had more organic, just finding what you're looking for. Now it seems like they find whoever's spending the most money on advertising. And that doesn't really matter if it's Google or Bing or this one or that one. I don't find any to be much better. I also find the timing pretty funny to be going after them when AI and ChatGPT is something that they're talking about being able to take over some of their market share. So here you are saying that they're a monopoly that others can't compete with, and in the same breath talking about a company that's coming around taking some of their market share. I don't know if that's really a monopoly or not, but it's driven the stock lower. It's had trouble rallying, and I think that's given people more time to buy it at a great price. It's trading at below 20 for next year's PE versus earnings. Forgive the weird way I phrased it, but I'm kind of excited to see the valuation. And I think that's super inexpensive for a company that's growing at 20 times earnings on average. Then I think even if the DOJ is able to, they're able to do whatever they want. So maybe that's the wrong word. But even if they end up splitting them up, I think what you're going to find is the parts are more valuable than the whole. It's actually going to make the company more valuable as a total. Right now, you're getting a bit of a discounted price because they're all in one umbrella. If they actually broke it up into YouTube and the search engine and maybe Waymo and Waze are its own thing and they have one let me look and read it. Is it so Calico, which is their one that's working on trying to keep people younger longer. Like they have all these divisions that if they split them up and put it into separate companies, I think you're better off owning those separate companies as an investor. I think the government is making a huge mistake by going after them and trying to break them up because it's not just competition here locally. As you get into competition worldwide, I think it's important that our big companies be able to be better and bigger than the other countries' companies. I love that Google's as big as it is and Amazon. I hope they continue to expand into other places and keep driving business. I really do. I think they all compete with each other. I mean, while Alphabet has Motorola and Android, they're still competing against Apple. They're still competing against others. And while they have Waymo and Waze, you have Zoox, and then you have from Amazon, and you also have Tesla's self-driving and robo-taxi and everything. So I think it creates a competition among the best of the best to push them to drive quicker and faster and build their companies. I am amazed when I look at how many things Google has and how many companies are under its umbrella. It's an unbelievable conglomerate. And really, I see this news being negative in the media. I see it holding the stock price lower. And I think that creates a great opportunity. And I actually dug in pretty deep into it this week, pretty much every day, adding on to my position as a trade. Now, I also own Google in the safe deposit box for those of you who don't watch too often. Amazon, Google, Meta, Intuitive Surgical. I have 10 or 12 stocks that I literally just I have them in a place. I can't touch them. I can't trade them. I leave them alone and they just do what they do. They have their ups and downs and I think they're the best of the best companies. And then I'm going to say one last one that I've noticed beginning to creep along that I don't always pay close attention to, that I'm getting more excited about, is Portillo's. Portillo's pushed around $12 a share, which doesn't sound so interesting because it only got down to like 9 or 10. But when I look at Portillo's, I think they have a great restaurant. I was in Chicago for 10 years. I think they have a great product, but their earnings aren't really outrageous for a company as small as it is that has the potential to grow at the rate it does. Now, if I was on their board, I'd be looking at places different than they are to expand, and I'd be doing things a little bit differently. At the same time, it's pretty cool to see a company that has earnings and profits trading at the price to earnings level that it's trading at, with the potential to grow over the next 10 years that it could grow at. And then even when I look at the chart, same rubber band effect. So the IPO was right around $25 a share. It shot up to $40 a share. So it had a $15 run. That's probably the excitement of all the people in Chicago who know it and know the lines down the street and everything else and how good the food is at a reasonable price. It's slowly reversed, and not super slow. You can look at the chart, and gone right below that original IPO offering price of $25 all the way down to 10, a little bit lower. Well, $15 on the upside, $15 on the downside, perfect rubber band. I would like to see it just magnetize and get sucked right back to that $25 IPO price, which would be great. And that's doubling your money. Now, I don't expect that to happen anytime soon. Again, you need to make your own financial decisions. But I do think it's realistic to see it go right back to that IPO price and then do whatever it does. Hopefully, they're able to get their act together real well, continue to put out stores. The only thing I've noticed when I listen to a quarterly earnings report that I would make a criticism is they seemed overly focused on some salads they added to the menu, and how well they had done, because they wanted to reach out and get the female customer and make them happy. Stick with what you're good at. Don't worry about making the menu bigger and adding new things. You have a huge menu already. McDonald's has had pretty much the same menu for the past 30 or 40 years. Every time they try new things, whether it's the McDLT or the McRib or whatever, it does well, it does poorly, but it doesn't stick around too long. Just stick with your Italian beefs and ribs and hot dogs and the stuff that you do great with. Continue to drive earnings. You have good stores that are profitable in a short amount of time. Make sure to train your staff well and have a good process. That's my best recommendation. Not that any of you are listening to me. Anyway, do me a favor if you haven't already. Hit that subscribe button, smash the like button, make some comments. Let me know how you did this week. I hope I didn't just talk about my trades a little too much. I'm still really bullish the economy. I think the stocks are continuing higher. The sell-off on a week ago Monday was a great sell-off, creating a great opportunity. Let's keep our fingers crossed and have a great week.